You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And also, if you take a look at gold in relation to the CRB index, it's making multi-year highs. In relation to the oil price, it's making all-time highs. So what's happening is the gold price is rising faster than inflation now. So these mining costs are coming down, and these margins are increasing for these majors and mid tiers.
You are listening to MSE. I'm Bill Powers, your host. Thank you for tuning in. In today's show, you will hear from Dr. David Erfle from JuniorMinerJunkieWithAY.com, our monthly check-in with David. David, welcome back onto the show. You have been vacationing, taking a little bit of time away from the phone, away from the highly intense scrutiny of the markets that you do on a day-by-day basis. So welcome back to your office. And what do you think about gold? We've hit.
Thank you. Yeah, it's that's the first family vacation I've had in like 3 years. So it's the first time I've tried to distance myself from the sector for a couple of weeks, and even though I still have to get the newsletter out every week, there was a lot less information, and I tried to get as much vacation time as possible. But it never fails. When you do take some time off, something important happens in the sector, and something that you missed. So the big thing that I did miss was a Cisco being bought out by Goldfields, the other 50% being bought out, for an all cash offer. But as far as the gold price is concerned, it just keeps making these all-time highs, but it's going up with the stock market, and the stock market bounce, I think, is getting a little long in the tooth, and of course, Powell came out and basically guaranteed that they're gonna reverse their monetary policy and start cutting rates. And the dollar reacted to that, of course, and it's trading at a 52-week low, and it's at the U.S. dollar index is at that 100 level, and it's starting to bounce here today from that 100 level with tensions in the Middle East. So today you've got the gold price and the U.S. dollar both getting safe haven bids. But since the gold price went up with the stock market, and I'm expecting a stock market sell-off probably maybe to start maybe this week or next, then it's going to be interesting to see what the gold price does, and especially what the gold stocks do when the stock market does reverse.
So you mentioned Goldfields purchasing in an all-cash deal of Cisco Mining. Do you expect that money, especially because it's an all-cash deal, to rotate back into other juniors?
I think it already has. I think that started to take place a couple of Mondays ago when it was announced, and you're seeing it in a lot of these late stage juniors. I was fortunate enough to hold a couple of them. I hold a couple of the late stage juniors that I think are the money's being rotated into. You've seen huge moves in some of them, and my subscribers and I have done well in a few stocks because of that rotation. So, because when it's an all cash deal, they're going to start rotating it. And also the stock moved up higher than the offer price. That was also a very good sign. So, I expect more M&A to take place after this was announced. We've got the Beaver Creek conference that you and I are attending, and then the Denver Gold Forum right after. And I expect a major deal to come out of these conferences. I mean, everybody's going to be there. They're all going to be talking about what they need, what they're looking at, working out logistics, and we usually have some M&A come on the back end of these conferences. So that is taking place. The Beaver Creek conference is from September 10th to the 13th, and then that's directly followed by the Denver Gold Forum. So, like I said, I expect to see more M&A take place. The gold price continues to make all-time highs, and some really important resistance levels are coming up on the GDX and GDXJ. So I wouldn't be surprised to see gold stocks back off here a little bit when the stock market does reverse. But if you take a look at the gold price in relation to the CPI adjusted gold price, it's about to make a 45-year high, because the gold price, when it ran up in 1980 to 850, the CPI adjusted gold price hasn't hit that level yet, and that level is now around 2670, 2675, I think, and that's coming up here because the gold price is about $100 away from that right now. And also, if you take a look at gold in relation to the CRB index, it's making multi-year highs. In relation to the oil price, it's making all-time highs. So what's happening is the gold price is rising faster than inflation now. So these mining costs are coming down, and these margins are increasing for these majors and mid tiers, and you're seeing that in these blowout Q1 quarters, and then followed by a blowout Q2 quarter. Especially if you take a look at Newmont, which is the bellwether. That's the go-to gold stock if you're a generalist and you're looking to get into the sector. It's the most liquid. It's the largest gold miner, and it's been leading the gold stocks higher. It's been outperforming the S&P. It's been outperforming gold. And if you take a look at the S&P in relation to the GDX and Newmont, they've been rising ever since the gold price started to break out of that 13-year cup and handle back in late February. So the stars are really lining up here for the juniors to finally start catching up with the majors and the mid tiers. We're not there yet, but we're starting to see a lot of these quality juniors are beginning to play catch up because of that once that Cisco deal was announced. Because basically, Bill, we're all us resource investors, we're all still trading amongst ourselves. The generalist investor still is not in this sector, and you could tell that by the volume in the GDX and the GDXJ. The volume is still really low. So, and also the gold ETFs, we're finally starting to see Western investors we're starting to see inflows into the GLD from the West. That ship is starting to turn. So, the gold price, it's at this resistance area, that 2,500. I'd like to see a monthly close above 2,500. We've had a couple of weekly closes above 2,500 now, but I'd like to see a monthly close above 2,500. And the end of the month is coming up here on Friday. And also we want to see the gold silver ratio start coming down again. It got up to 90. When you see the silver price lagging gold, that's not good. If you take a look at silver and the gold stocks, and the silver and the miners, they've been lagging the gold price for ever since gold peaked at the first time at 2000 back in 2020. So we need to see these stars align. We need to see the gold silver ratio trending below 80, and we need to see the gold stocks decoupling from the stock market, as well as the gold price decoupling from the stock market.
So those are the key triggers to look for in terms of inflows of cash into the juniors.
Yeah, that, and like I said, you've already starting to see the GDX S&P ratio. It's got this year-long inverse head and shoulders base that it's starting to break out of right now. But like I said, the volume is just not there. Smart money is seeing this, and you see that by these miners, the big miners, the Agnicos, the Kinrosses, the Newmonts, the royalty companies, Royal Gold and Wheaton Precious Metals. These stocks are really starting to catch major bids, but that hasn't trickled down into the juniors just yet. It's like I said, it's starting to after that Cisco buyout announcement. You're starting to see a lot of these quality juniors have these big white candles after that deal was announced. So they're starting to move. And if you take a look at short-term charts, you look at 6-month charts, and you look at some of these juniors that have already moved, you're like, wow, this stock's already had a 3-time move. I really don't want to chase it. But then you pull back and you look at a 5-year chart, and it's only a little bounce because they've still got a lot of catching up to do to when the gold price was just when they peaked in 2020, when the gold price was $500 lower.
Dave, what are your thoughts on the proposed Mexican mining ban? You have exposure in Mexico to some silver companies that are open pittable. Does this concern you, or what due diligence steps are you taking to look into this?
Yeah, that's something else that happened while I was on vacation. In the lower house of Congress in Mexico, the open pit mining ban was passed, and I think they still lack 2 votes in the Senate, and that vote's coming up I think it's coming up at the end of the month when Claudia takes over in October. So I've got a lot of meetings scheduled with Mexican miners, the Mexican developers that I own positions in, and there's 2 companies that I own positions in that are directly affected. One is at the permitting finance stage, and it needs an open pit permit, so their stock has been hit pretty hard. But another one is an earlier stage company that's fully funded into a construction decision by late 2025, and they don't need to get into the permitting process for another 18 to 24 months. So their stock really hasn't been hit that much. But the other companies that I have exposure to, they don't need open pit permits, but their stocks have been hit anyway, because that's what happens, right? When people fear something happening in the government that's related to mining permits, it doesn't matter if they need an open permit or not. They feel that, hey, if they're going to try to ban open pit permits, then they might not give underground permits either. Well, I've got another company that is waiting on an underground permit, and I'm looking forward just to speaking with all these companies to get a sense of what's going on in Mexico, because I know these management teams that I own stock in these companies, they have close ties to officials in the Mexican government, and they can catch me up to speed about what's really going on.
So when you go to these conferences, and I'm trying to point out to many of our listeners the need to network, even if you can't get to every conference, to develop some sort of start at networking. You have CEOs, I know, in your Rolodex or your contacts list on your phone, to where you can call a CEO that maybe isn't even in a former CEO that's not even an elite executive right now, and ask about these issues, right, Dave? Because you've been to the conferences for 2 decades, you have sources that you can glean from to learn about this.
Absolutely. It's invaluable having these contacts and speaking with these people one-on-one at these conferences. Unfortunately for a retail investor, the Beaver Creek conference is an industry-only show, and for invitation only. But these other conferences are not, like VRIC and and Metals Investor Forum. These are for retail investors, and anytime you get a chance to speak with management teams one-on-one, face-to-face, I mean, it's different than just a Zoom call. You get a lot more information from body language, eye contact, meeting up with them in a bar. If they've had a couple of drinks in them, you might get some more information out of them that you wouldn't normally get. I mean, that's happened several times to me. I'm worried about something, and
And you and I were with one executive, and you told me afterwards, because of it, you weren't going to invest because he was too forthright when he had too many drinks.
Yeah, exactly. I mean, that's just the nature of the business, and you try to find out this information, the best way you can. And the best way to do that is to have these one-on-one meetings, and especially have go to these networking affairs afterwards, where there's generous amounts of alcohol being consumed by some of the management. So yeah, I mean, it's all part of it. It's what makes it fun, especially in a frustrating market that this has been for the past couple of years. The frustration. It makes it basically brings it down to where you have these companies, and you feel real good about them because the management has done well by you in the past with other companies, or that they're very learned, and they know how to raise money, they know when to raise money, they have the access to capital, they have the contacts, and especially the companies where the CEO or you have management that are former brokers, they understand, the importance of a tight share structure, and making sure that they raise that capital at the right time to keep. And of course, you want to make sure that they're invested right along with you. to have large positions and continuing to add during these financings.
Dave, as you know, Victoria Gold went into receivership, and the attorney general up there in Yukon said, we had no intention of ending the work of that corporation, but the environmental concerns were simply not being addressed to our satisfaction. And they said that they want mining to resume at this site. So it seems to me that they're trying to reassure potential investments in the Yukon with this statement, but saying it got to the point to where we needed to intervene. How does this affect your view of the Yukon from an investment standpoint?
Yeah, I'm not invested in any companies in the Yukon. I haven't been for the past few years. Some of the stocks that have sold off have gotten to interesting valuations, and I think they've become a little overdone. So I'm watching the situation. I'm not ready to pull the trigger yet on the Yukon, but I want to see how this shakes out more. But, as far as Victoria is concerned, I was never an investor of the company. I liked the project. I visited the project, but they never held enough cash for me to be comfortable as a single asset producer. Because if something happens, then if you don't have enough cash, this is what happens. And I think this is the reason why they ended up going into receivership, because they couldn't pay their debts. And unfortunately, it cost the CEO his job as well. So, single asset producers, that's what you really have to be careful with. But as far as the Yukon is concerned, there is a couple of companies, like I said, that are on my watch list that have gotten really interesting, and I'll follow them, and I'll speak with them at Beaver Creek also.
If some people say that when we're looking at junior mining equities, we should be at least 90% negative in terms of our take on it, because at least 90% of them fail. Do you agree with that perspective? Because you've shared that you're in this because you actually enjoy it beyond the money.
I do.
Yeah.
Yeah, I do. I enjoy the challenge. I look at it like 7 out of every 10 of my investments are probably going to fail.
Could you say that one more time? Because you've been at this 20 years.
7 out of 10.
7 out of 10.
That's basically you equate it to a baseball player. If you're in the Hall of Fame and you got a lifetime batting average over 20 years of over 300, you're probably going to get in the Hall of Fame. And if you get into 3 of 10 of the right companies, and you get multi-baggers out of them,
life-changing,
then it's gonna cover the losses of the losers, and it's gonna make you a lot of money as well. So, as far as the frustration is concerned in the sector, this is the most frustrated I've ever been. I can honestly say that in the 20 years I've been in the sector, for obvious reasons. You've got all-time high after all-time high being made in the gold price, and yet the juniors are nobody cares about the juniors still, which is a good thing, because it gives us plenty of time to get into the right companies and make sure we're in the right companies when they finally do take off. But like I said, it's that inflation-adjusted gold price. Once it's getting up there, and these margins are rising, and these costs are going lower, and the gold price is rising faster than inflation now. Inflation's remaining sticky. The Fed's basically thrown up its hands and given into inflation, because they're going to end up lowering interest rates with inflation well below their 2% fantasy target, which they're never going to hit, and they know it. So they're going to start lowering rates, while inflation is still sticky, and they're really focused on the job market now. So we got the unemployment rate is up to 4.3% now. So but as far as the gold price is concerned and the stock market is concerned, they've both been rising at the same time. And a lot of that has to do with the Fed, lowering rates. So the one thing that does concern me with the silver price continuing to lag the gold price is a sell the news reaction, because we've had buy the rumor for so long in both the stock market and the gold price. What's going to happen when the stock market, finally reverses, because, hey, the Fed's lowering interest rates for a reason, because it looks like we're going into recession, even though they tell us that it's going to be a soft landing. Well, we've seen what happens when the Fed tells us anything. The opposite usually happens in the over 20 years that I've been following the Federal Reserve. So, all I know is that during the past three rate cutting cycles, 2001 to 2003, 2009 to 2011, and the short one in 2020, gold stocks have done really, really well along with silver and the gold price.
Well, Dave, I frequently end with this question. I'm going to do it again. If we look at the Junior Miner Junkie subscription sentiment indicator, have we seen an uptick in the last 30 days?
No, we have not. I always tell you it's right around 300.
Uh-huh.
Well, it's a little below 300 now. So,
little attrition in the last month.
That's a really good contrary indicator.
It's not ticking with the gold price, huh?
Several of them kind of raising their heads. You know what? I'm done. I'm tired of these juniors.
Don't tell me they're undervalued any longer.
Not going up and treading water and being undervalued for so long, but that's a good thing. I like it. But because you constantly have to be a contrarian, especially in the sector. So, like I said, we're really close to a major move in the gold stocks. But I think before that happens, we're probably going to see a little correction first.
Oh, thanks, Dave. To learn more about Dave's service and his free weekly email list that goes out on Friday evenings about usually the gold, what happened in gold that week, you can sign up for that at Dave's website, juniorminerjunkie.com. Dave, always appreciate your insights. I'll be chatting with you. Probably we'll do an interview when we see each other in Beaver Creek in a few weeks.
Great, Bill. Look forward to it.